e-learning program, and this is accountancy lesson. Kuzuzambo, welcome to Bhutan e-learning program, and this is accountancy lesson for key stage 5, and the topic we have for today is costing. And under costing we have two parts, and the first part that I'm going to cover today is store ledger, and the next we have is cost sheet. And for today I'm going to take you through the lesson that is on store ledgers. Okay, we have lesson objectives. Under the lesson objectives we have three: understand the concept of cost, explain the components of cost, and prepare store ledger. And the first we have is under the first objectives we have is understand the concept of cost. So here I'm going to cover the meaning and definition of cost, the types of costs, and we have the other concept also, but whatever concepts I may not cover in today's lesson, because the next lesson is on cost sheet, and the concepts are quite interchangeably used under both the cases. So therefore whatever I can cover today I'll just do it, and the remaining I'll cover up under the next lesson, that is cost sheet. And the next we have is components of cost, and that I'll cover today, and the same concept we can use it under the cost sheet as well. And finally I will show the practical preparation of store ledger. Okay, first we have is the concept of cost, and under this we are going to look at the meaning of cost. So cost usually is the measurement of the amount of resources that are used for producing goods and services, which can be expressed in terms of monetary value. Okay, so that is what I have said regarding the concept of cost, and I have here the pictorial presentation to have a better understanding about the concept of cost. And in the first case we can see there the material, that is the material cost, and we can also see there the labor cost. At the same time we have the consumables, that is what we also say it as the expenses, other expenses I mean. Anyway, I have also given the definition here, so I'll take you through the definition first. Cost is a measurement in monetary terms of the amount of resources used for the purpose of production of goods or rendering services. Manufacturing of goods and rendering services involves consumption of resources. For example, material cost is the price of material consumed for manufacturing a product or rendering services. So that is the definition, or you also take it as the meaning of the cost. Okay, so before we look at cost center and cost unit, we have to know the types of costs. The types of costs basically are of two, and they are the fixed cost and variable cost. Fixed cost, as we all know, fixed cost means the cost which will remain unchanged irrespective of the output that we produce, the cost which usually remains the same. So that is what we call it as fixed cost. And at the same time we have is also the variable cost, the cost which is going to vary as per the level of output. So that is what we call it as variable cost. So these are with regard to the types of cost, and we have also the classification of costs, and basically they are three. They are material cost, labor cost, and expenses. Along with that we have also the elements or the component of cost, which I'll just let you know down the line. Okay, now the next concept that we are going to look at is cost center and cost unit. So first we have is cost center. So cost center basically refers to a location or a place or an item of an equipment which is required for the purpose of cost ascertainment and for the cost control. So that is what we have is cost center. Then we have also the cost unit. So cost unit usually refers to the unit of a product, service, or a time or combination of this for which the costs are ascertained or expressed. And at the same time cost center is also the physical measurement of a product, such as numbers, weights, then time and value, and so on. So these are what we have with regard to cost unit. So to further explain cost unit, for instance, like let me give you example to measure the cost. For instance, like for automobiles, how you are going to measure the cost. For automobiles, the cost unit will be measured by taking the numbers into account. For instance, if it is cement, and we are going to measure it by using the kilograms, and if it is power, then we will measure it by using kilowatt, and if it is hotel and services, we are going to measure by per room and per services. And likewise, we have transportation, and if we have to measure transportation, it is measured in terms of kilometers and so on. So these are just examples to know the cost units. Okay, let us see what I have here. Okay, the first we have is cost center means any unit of entity selected with the view to accumulating all the costs under that unit. The unit can be a product, it can be a service, it can be a division, it can be a department, section, group of plants and machinery, group of employees, or combination of several units. So these are what we call it as cost center, and hope you are getting me. Okay, so that's regarding the cost center, and in simple term, as I already told you, cost center is simply a location or a place or an item of the equipments which are required for the purpose of cost ascertainment. Okay, now the next we have is cost unit. Cost unit is a form of measurement of volume of production or services. It means the cost attributable to the unit or quantity of product, service, time, or combination of this. So that is with regard to cost unit, and in simple term, as I told you, cost unit refers to a unit of product, service, or time, or combination of this, and which is also the physical measurement in terms of number, in terms of weight, in terms of value, and in terms of area, and so on. So this is with regard to the cost unit, and I have just mentioned the examples also, and hope you are clear with regard to this. Okay, with this we have the components of costs, and basically the component of cost we also call it as elements of cost, and that are categorized into two, and they are direct costs and indirect costs. And under direct costs, again, we have direct material, direct labor, and direct expenses. So that is what we call it as classification of costs. We have direct material, direct labor, and direct expenses, and all these three will constitute prime costs. So which means prime costs, it is the sum total of direct material, direct labor, and direct expenses. And the other side we have is indirect cost, and same like direct, for indirect also we have three categories, and they are indirect materials, indirect labor, and indirect expenses. And all these three, when we combine, or the sum total of all these three indirect material, labor, and expenses will become overheads. And further, overheads can be of three kinds, and they are factory overheads, office overheads, and selling and distribution overheads. And now let me just tell you the meaning of each one by one. Okay, the first one we have is direct material, the materials which can be easily identified, or which are easily identified, or which can be directly allocated with the production. So that is what we call it as direct material. For example, for the production of automobiles, the steels or the metal that we use, and they are considered as the direct materials. And likewise, in the clothes shops or in the garment shops, the clothes are considered as the direct materials. Then next we have is direct laborer, and direct laborers refers to the laborers which are directly engaged in the production process. For instance, like again in the same example, that is in the production of automobiles, the mechanics that are involved in the assembling the parts of the automobiles, they are considered as direct labor. And likewise we have is direct expenses, and direct expenses are those expenses which are other than the direct materials and direct labor. So all other expenses which do not fall under the direct materials or direct laborer, they are considered as the direct expenses. And all these three will form prime cost. As I told you, prime cost is the sum total of direct material, direct labor, and direct expenses. So that's regarding the direct cost. And likewise we have for the indirect cost. So under indirect cost also we have again three, as I told you. Firstly we have is indirect materials, the materials which cannot be easily or which cannot be conveniently identified with the production process, in the production process I mean. So these are what we call it as indirect materials, and they they do not become a part of finished product, and they are relatively inexpensive. Whatever materials that are used and they are relatively inexpensive and they are called as indirect materials. For instance, like again in the same example, in the production of automobiles, whatever items like lubricants, like notes, like glue, like the smaller parts of rubbers and so on, so they are considered as indirect material and they do not become part of finished product. But without those, again, to complete goods again is a big question. So that's regarding indirect materials. Then next we have is indirect laborers. As I told you again, that laborers who are not directly engaged in the production process, but who helps or who supports or who gives their helping hand to produce goods and services. For instance, like the supervisor, the security guard, and the watchman, all those are considered as the indirect labor, though they do not directly contribute in the production process, but their services also becomes indispensable in the completion of the production process. So these are considered as the indirect labor. And likewise we have is indirect expenses, and indirect expenses are all other expenses other than indirect materials and indirect laborer. So these are all the indirect costs, and all these three when we combine, and we call it as overheads. So overheads, as I told you, is the sum total of indirect materials, indirect labor, and indirect expenses. And further, overheads are of three kinds. They are factory overheads, office overheads, and selling and distribution overheads. So factory overheads, whatever indirect expenses that is incurred or that is spent at the factory level, at the production level, they are called as factory overheads. They are also known as work overheads or production overheads. Then the second one we have is office overheads, whatever indirect expenses that are incurred at a general level or for the purpose of administration, and we call it as office overheads, and it is also called as office and administrative overheads. Then finally we have is the selling and distribution overheads, whatever indirect expenses that are incurred at the time of selling and distribution in order to stimulate or in order to enhance the sales, and we need to incur certain expenses, and those expenses falls under the selling and distribution overhead. So that's the overview of the components of the costs or elements of the costs, and hope I'm not confusing you all. Okay, now let us look at the next concepts of inventory. So inventory, okay, so since the major part that we are going to touch for today's lesson is the inventory, so therefore it is very important for every one of you to know the concept of inventory, because it is quite confusing, and at times it is understood in the wrong way. So therefore we have to have the better understanding about inventory. So inventory in general is anything that is held by the business for the sale or for the consumption to produce goods and services. So that is what we actually call it as the inventory. So anyway, I have given the definition given by BAS, that is Business Accounting Standard, in the slides below. So before that, I have again the pictorial presentation of the concept of inventory. So that is what we can see here. Okay, the first one we have is the finished inventory. So they are readily available to be consumed, and they can be directly consumed from the market. So that's the first one, and you may have your own understanding anyway, as long as you do not distort the meaning. So that is what you can have your own judgment from the pictorial presentation I have given over here. And in the second picture, you can see the cement bags over there. So the cement bags can be interpreted in two ways. We can consider that as a finished product if it is for the industry, or if it is in the factory, then that can be considered as a finished product. But the same product which we consider as a finished product from the factory, it may be considered as raw materials for others. For instance, like if it is a manufacturing concern, cement can be considered as their raw materials. So these are what interpretation we can have. You can also have your own interpretation, I mean. And the third pictorial presentation I have here is the logs. Okay, so that is obviously the raw materials which we require for the furniture house. So these are what we consider it as the inventories. It can be held by the business for sale. It can be held by the business for the purpose for self-consumption, but not with the intention of using it in the concern, but with the intention of further producing goods and services. So this is what we have the concept of inventories. Now let us look at the definition or the meaning of inventories given as per BAS, that is Business Accounting Standard 2. Okay, inventories are assets. In the first place, assets which are held for sale in the ordinary course of business, in the process of production for such sales, in the form of materials or supplies to be consumed in the production process or in the rendering services. So these are the definition which are given under BAS 2, that is Business Accounting Standards. So you may go through, and as I have also informed you, inventories are something which are held by the business for sale and of course for self-consumption, but for the purpose of production of goods and services. Okay, inventory valuation is normally made at a lower cost or net realizable value. So in simple term, which means inventory will be valued at a cost price or market price, whichever is lower. So we have to really know that, because while valuing inventories, okay, we have to take into account the value whichever is lower, either at a cost price or at a market price. We have to consider whichever is lower. Okay, next we have is the stock valuation. Okay, so this is the pictorial, again the pictorial presentation of what I have just said few minutes ago, that is the stock valuation is done at a cost price or market price, whichever is lower. So I can just tell you that, is the cost price lower than selling price? If it is yes, then value stock at cost price. If it is no, value stock at selling price. So therefore, further again, once again a reminder, you have to value the stock at a price whichever is lower, that is either at a market price or cost price, that is net realizable value, whichever is lower. Okay, next we have is inventory verification system. So for inventory verification system, we have two, and they are periodic and perpetual. So we have is periodic and perpetual. So periodic, under periodic inventory system, stocks are verified only at the end of the period, which means under this method, the stock verification is done by physical counting, weighing and so on. And the next we have is perpetual inventory system, which means under this system, the stock is verified or the verification is done after each and every receipt of materials. So these are the two kinds of the inventory verification system, that is periodic and perpetual. Okay, next we have is methods of inventory valuation. So inventory valuation we have already learned, or we have looked at. Inventory valuation, it is valued at cost price or market price, whichever is lower, using these two methods. And the first method we have is first in first out method. We also call it as FIFO, which means first in first out, and whatever stock that is received first has to be issued first. So that is what we call it as first in first out method. And the second one we have is weighted average. So under weighted average method, the rate of issue, it is calculated by using the formula that you will see there, that is total cost divided by units of goods, or the amount divided by units available. So that is what we call it as the methods of inventory valuation. Okay, I have the examples here. So the first one is first in first out, that is FIFO method. So for that, the example, okay, on 1/1/2020 received 20 units at the rate of Newton 40, and on date 5/1/2020 received 10 units at the rate of Newton 45, and on date 10/1/2020 issued 8 units. So in this case now, the question here that you all need to know, or you all need to analyze this, from which lots will it be issued. So you have to know, since it is first in first method, whatever materials that we have received first, so which means the materials which we have received on 1st January 2020, so from there we have to make issue. So therefore, that is whatever issue that we are supposed to make on date 8, we have to make it from the lots that has been received on date 1st, not from the lot which we have received on date 5th. So that is what we call it as first in first out method. Okay, now the second one we have is for weighted average method. So again, with the same example, we have a different calculation. So which means for the weighted average method, since I just told you or informed, or we have already looked at in the meaning itself. Here the rate of issue will be calculated or computed by using the formula, that is total amount divided by units available. So therefore the units we have is 20 plus 10, and whatever amount we have is received in the first case, the amount is quantity times the price. So that will constitute, or that we will get is the quantity. So quantity first, in the first lot we have received is 20 at the rate of nil term 40, and in the second case we have received 10 units at the rate of nil term 45, and the quantity we can see there is 20 plus 10. So anyway 20 times 40 plus 10 times 45, altogether it is becoming 1250, and that is what we call it as the amount divided by the units available is 20 plus 10, so that is 30. So therefore the price now has, the issue price or the price that we are going to get is 41.67. So therefore altogether we have received 30 units, then the issue that we are supposed to make is 8 units, then we are left with a balance of 22. So therefore to take into account the balance, we have to consider the price which we have calculated above, that is 22 times 41.67. So this is what we are supposed to do if we are using weighted average method. Okay, with this we have a question. To be calculated. Now the question over here, okay, I'll just take you through, and for the practical problem I'll use the board I have next to me. So anyway, first I'll just take you through the question, and I'll give you a few minutes. First let us go through the question together. Okay, the question goes here. The stock of wheat flour of Novo Bakery on 1st January 2019 was 1000 kg at the rate of nil term 25 each. The following purchases and issues were made. Okay, on 3rd January issued 500 kg, on January 7 issued 450 kg and purchased 500 kg at the rate of nil term 25.20 each. Okay, on day 7 we have both issue as well as we have purchases as well. Okay, January 9 we have purchased 1000 kg at the rate of nil term 21.30. Okay, January 12 issued 980 kg. Okay, then further we have is on 25th Novo did a stock verification and revealed a shortage of 10 kg wheat flour which was fully damaged by fungus in Gedu. And the question here, number 1 we have is prepare store ledger account by adopting weighted average method, and number 2, how will you deal with such losses, and it is normal or abnormal loss, justify. Okay, from this question, before we look at the practical problem here, let me take you through the concept of loss of materials. So under loss of materials, basically we have two kinds. They are normal loss and abnormal loss, and the losses which we have come across in this question, it can be justified both as normal as well as abnormal. So anyway, I'll just give you the idea about the losses. As I told you, we have two kinds, and they are normal loss and abnormal loss. So first we have is normal loss. Normal loss are those losses which are unavoidable. We cannot prevent it with any effort. Such losses are inherent. Such losses happens due to the nature of the product. For instance, like if it is in case of chemicals, it is bound that chemicals will evaporate no matter what kind of intensive care we do take, yet it is bound that chemicals will undergo certain points of evaporation. It may be lost due to sublimations or dyeing and so on. So these are what we consider it as a normal loss. And now how do we treat the normal loss? Normal loss will be treated in the preparation of store ledger by inflating the price. We have to inflate the price. Since normal loss we cannot prevent, we cannot avoid a normal loss irrespective of whatever care we take, yet we cannot prevent such losses. So therefore the solution that is left is to inflate the price. Inflate here refers to the price will be increased. The price will be increased using a certain formula, so that I'll just let you know. The formula is amount divided by whatever unit available. So that I'll just show you when we just look at the practical problem, or when I solve this question, I'll just let you know how it is done. Anyway, we have to know the treatment. Regarding the treatment, the price is inflated. So that is with regard to the normal loss. Okay, now the second types of loss that we may come across is the abnormal loss. So abnormal loss are those losses which can be avoided, if a proper care is taken, and such loss happens due to negligence and due to carelessness. So therefore such losses can be prevented if proper care is taken. So therefore such kind of losses we call it as abnormal loss. For example, the losses due to theft, losses due to fire, losses on the ways while transporting, and all such losses we call it as abnormal loss, and such losses can be prevented if proper care is taken. So that's what we have, abnormal loss. And how do you make a treatment of abnormal loss now? So abnormal loss usually do not form a part of cost, rather it will be shown in the statement of income. So anyway, for abnormal loss, okay, we are going to show it under the issue column at the normal price only. And with regard to the normal loss will be simply shown under issue column without the price, because when we carry forward the balance, the price is inflated. So that is why it is simply shown under the issue columns. So that again also you will get it practically when we solve this question. So with this, what we'll do is now, okay, once again go through the question and let us do the question together. Okay, so before we solve the question, firstly I'll just take you through the format of the store ledger. So this is what you will see under the store ledger. So we have several columns. In the first case we are going to show is the date. It is also very important because we have to record the stocks using, or we need to take the dates into account. So first is date, then we have is the receipt, we have is issue, and we have balance, and it has to be in whatever way it is appearing over here. So under each again we have is quantity, rate, and amount, and same thing under issue also we have quantity, rate, and amount, and finally we have is balance, and under this also we have same thing, that is quantity, rate, and amount. And hope you all got the format of stores ledger. So this is what we see over here now. Okay, with this what we'll do is we will record whatever transactions that Noru Bakery has recorded in the store ledger. I have shown here. So the first we have is date. Okay, this is what we have is 1st January 2019. There was a stock balance of 1000 kg at the rate of nil term 25. So therefore, okay, first let us record the date, that is on 1/1/2019. Okay, then okay, before we proceed further, what I'd like to request you all is please catch hold of a calculator so that the calculations becomes quite easy. And even for me also, I wish you all are there to give me the amount, but the situation here did not allow me, so therefore I'll also use the calculator. So the first one we have is, as I told you, the balance. We are going to record the balance. So therefore balance directly, okay, we have under receipt, which means whatever balance we have received. So that is what we consider quantity 1000 units at the rate of nil term. Okay, at the rate of nil term. Okay, 25. At the rate of nil term 25. So therefore the amount. Okay, how do we get the amount? Quantity times the rate, we get 25,000. Okay, so over here we have no issue on date first. So therefore now let us carry for the balance. So on the balance we have is 1000 times the same, that is 25. So we get 25,000. Okay, hope the first point is clear to you. So that is how we carry forward the balance. Okay, now the next date we have is on January 3rd. We have issues 500 kg. So now, okay, which date we have is 5/1/2019. So on this date we have no receipt, rather we have issued. So therefore we have issued how many units? We have issued 500 units. So we have to issue from the lot which we have received earlier. So anyway, in the balance we have only 1000. So from that unit we are going to make the issue. So issued how many units? We have issued 500 units. So 500 times 25. So now we have to use the calculators. Even I'll use the calculators. Okay, we have 500 times 25. So we get how much? We get 12,500. Okay, now we have again the balance. We have issued only 500 units out of 1000 units. So therefore that whatever balance we have, we need to carry forward. So therefore the balance we are left again is with 500. because out of 1000, 500 has been issued. So we have 500 times the same price, that is 25, so we get 12,500. So this is with regard to the transaction that has taken place on date 3rd. Okay, now the next one we have is on date 7. So on date 7 we have issued 450 kg and purchased 500 kg at nil term 25.20. So which means on date 7 we have receipt as well as we have issue. So let us record the date. Firstly we have a 7/1/2019. So here we have received. We have received how many units? We have okay, purchased, and purchase refers to the receipt only. So therefore we have how many units we have received? We have received 500 units. We have received 500 units at the rate of nil term 25.20. So we have to use the calculators. Okay, that is 500 times 25.20. Okay, we get 12,600. We get 12,600, and at the same time we have issues. We have issues to be made, and we have to issue how many units? We have to issue 450 units. So we have a balance over there 500. Okay, and from that balance we are going to issue 450 units. So which means the rate again is 25. So 25, so 450 times 25, we get 11,250. Okay, so that is the amount. Now the next question over here is, since we are using weighted average method, so therefore what we have to do is now we have to carry forward the balance, because on day 7 we have the new receipt, that is 500 units, and we have made issue from the previous lot, and yet we are still left with a certain amount. So which means we are left with how many units we are left with? Okay, out of 500 we have issued 450 units. So which means we are left with 50 units. So 50, then at the same time we have the new receipt, that is 500. So 50 times the rate will remain same, that is 25. Okay, then at the same time we have received 500. Okay, so before that we have to find out the rate. So to find out the rate, 50 times 25, so we get 1,250, and whatever we have received recently, so that need to be considered. So which means 12,600. So we add this, and that is what we call it as the value, 1,250 plus 12,600. So altogether we got this, okay, 13,850. So under weighted average method, as I have already told you, the rate of issue will be calculated by dividing the value with its available, or with its quantity, which means whatever unit we have. So this is what unit we have. We have 50 plus we have is 500. So altogether we have is 550. So under weighted average method, how do we calculate the price? We calculate the price, okay, by dividing the value divided by its units. So value we got is 13,850 divided by 550, that is unit available. So altogether we get divided by 550. So the price we get is 25.18. So this is the rate that we calculate using the weighted average method. So over here now we have is the balance, okay, 500 plus whatever remaining after making issue over here. So which means we got 550, and the rate we have to consider is this. Now rate we have to consider is this, since I told you that the method that we are using is the weighted average method. So that's why the price is going to change. So the price we got over here is 25.18. So we get 25.18 times 550. So we already got, that is 13,850. So this is how we calculate. This is how we get to calculate the issue rate. The rate using weighted average method. So this is what we have for date 7. Now we have is on date 9. So we have on date 9 again purchase 1,000 units at the rate of 21.30. So on date 9 we have 9/1/2019 we have purchases. So purchases refers to the receipt, so which means 1,000 units at the rate of 21.30. So we get 21,300. We get 21,300, and again the same thing. That is what I just told you. So to find out again the price over here, we have a balance of 550 in our hand, and we have received again 1000 units. So altogether it is becoming 1550, and the rate again it is going to change. So which means how we are going to calculate whatever amount we have over here plus the amount we have received recently, then divided by the quantity we have. The quantity we have altogether is 1000 plus 550, which I have mentioned here, 1550. Okay, use your calculators again. We have 13,850 plus 21,300. Okay, total we get 35,150, and apply in this formula, then divided by the units available we have is 1550. So which means we get the price or the amount as 22.68. So which means round off. So we get now times 1550. So we get 35,150. So this is how we do the calculation for date 9's transaction. Okay, now let us record. We are done with the transaction on date 9. Now let us look at the transaction that has taken place on day 12. So day 12 we have again issued 980 units. So we have 980 units to be issued on date 12. Okay, date 12/1/2019. Okay, we have no receipts, so it is the case of issue, so that is 980. So 980 has to be issued okay, from the lot we have in our balance, that is 980, that is 22.68. So we get, again use the calculators, 980 times 22.68. So we get 22,226.4. So this is what we have. Okay, now we have is the balance. Now we have balance in our hand is okay, 1550 minus 980. So we get 570. So 570 at the rate of 22.68. So we get times 22.68. So we get how much? We get 12,927.6. So this is what we have. Okay. So now the last we have is on 25th, Norwood did stock verification and revealed a shortage of 10 kg. Okay, so that shortage, okay, in this solution, now I just told you how to make a treatment, assuming it either as a normal loss or abnormal loss. And for this solution, we are going to consider or we are going to calculate the normal loss, or we are going to make a treatment of that 10 kg loss as a normal loss. So in case of normal loss, as I told you, normal loss will inflate the price, will increase the price. So and how we are going to show? Okay, we are going to show as 25/1/2019. So we have no receipt. So under issue, it will be simply shown under issue. It will be simply shown under issue column without the price, which means to carry forward the balance, the price will be inflated. So how do we calculate the price inflated? Okay, inflated, INFLATED. Okay, inflated price. Inflated price is equal to whatever amount we get. So whatever amount we get, now the balance we are left with is, okay, out of 570, okay, we have to deduct 10 as a loss. So therefore balance we will be left with is 560. So 560, then the price will be inflated. Now how do we calculate the inflated price? Okay, the value over there, so that is 12,927.6 divided by the units available. So units available we have is 560. So we get, okay, we get 12,927.6 divided by 560. So we get the price as 23.085. So that is what we call it as the inflated price. Since normal loss cannot be avoided, and what we can do is we can simply cover this loss by inflating this price, by increasing the price. Price previously is 22.68, now it has increased to 23.085, so which means the price has inflated. So to cover up the loss, we have inflated the price. That's what we have, 23.085. okay, 085, and we get the amount as 1200, okay, 12,000, sorry, 12,927.6. So this is how we calculate the value of the stock that is in our hand, using or assuming whatever losses as the normal loss. And one point to be reminded, okay, whatever balances we have shown over here, or you can directly show in the balance also. And at times, assuming that whatever balances we have received from the previous year, so we have just assumed that it is received from the previous year, so that is why you may show it under the receipt also, or directly you can take it as a balance. So this is what I just would like to remind you here. Okay, so this is the solution. Okay, assuming assuming whatever shortage as the normal loss. So this is what we have. So now let us look at the solution I have got over here. Okay, so whatever is the same thing, whatever we have done is same, and except under that note, okay, the normal loss has been entered only in the quantity column. So which means under issue it will be simply shown under the quantity column. So that is what point number 1. And point number 2 says the price has been inflated as under. So price has been inflated as under, I have also shown here, and you will also see in the slide there. So which means okay, the prices over here has been inflated, therefore the value of closing inventory is okay, 560 times 23.085. so that is the inflated price. So this is how we solve, or this is the practical problem of store ledger, where whenever we come across the shortages, we are considering, or we are assuming this as a normal loss. Okay, next we have is the solution for the same question, where the shortage is assumed as a abnormal loss. And as I told you, when the shortages are assumed, or when it is to be treated as abnormal loss, it will be shown as usual at a normal price, which you will see in the next slide. Okay, the same thing, everything is same, you can compare. So till here, over here, in case of normal loss, it is simply shown in the quantity column of issues, and whereas in case of abnormal loss, it has to be recorded at a normal price. So which means, see the difference there, you will see is 10, again is the shortage same, shortage has to be shown on the issued column, and the rate, it will be recorded at the normal rate, which means 22.68. so this is how we record, and the value of the closing inventory may be different, all because the shortage we have considered it as a abnormal loss over here. So again, I have mentioned under the notes, number 1, the abnormal loss has been entered only in the issue column with its original rate, and second, the price or the rate remains the same. So therefore, as I told you, it is recorded in the issue column at the normal rate. So these are the treatment with regard to the normal loss and abnormal loss. Once again, let me remind you, okay, when it is treated as normal loss, it has to be simply shown under the issue column, that is under the quantity column, and the price has to be inflated. And when it is to be considered as abnormal loss, it will be shown as usual under the issue, and it will be recorded at normal price. So which means abnormal loss will not form a part of cost, rather it has to be shown on the debit side of the statement of income. So that is why it is to be recorded at a normal price. So that is with regard to the treatment, that is with regard to the solution where we have shortages, that is considered both or assumed both as normal loss as well as abnormal loss. So this is what we have with regard to the solution of the store ledgers. Okay, then further we have is how will you deal with such losses? It is normal or abnormal losses justify, which I have already explained in detail. So therefore, you must have already got the idea how to make a treatment of losses. When it is considered as normal, how you are going to deal with. When it is considered as abnormal, how you are going to deal with, we have already looked at. Anyway, I'll just run you through. The loss of 10 kg of wheat flour can be treated as normal loss because the Nobu Bakery is a small business, and to install very good ventilated store at this point of time is going to be more expensive than losing 10 kg of wheat flour in a month. The price of inventories does not get inflated materially. it can be classified or treated as abnormal loss as Nobu Bakery has the option to create a good ventilated store to avoid such losses. Both the answers seems logical and correct, but the point here is it depends on the justification given by the accountant to the auditors. So as I told you, it can be assumed as normal as well as abnormal, so it depends upon the situation. However, there will be financial decision impact as both the treatment is going to have different closing inventory balance, which will be reflected in the financial statements. Okay, with this I have activity for you all, and the first activity, though I have not mentioned here, what you can do is you can solve the question. You can solve the question without referring the solution which I have shown in the PPT. Rather, what you can do is you just catch hold of the question and you can solve on your own, and later you can compare and see how things are done. So that way, I think the concept will become more clear. Just to watch and just to see somebody doing the question on the board, rather than that, what you can do is you can have hands-on practice by doing that. The first is that, and the second one we have is how is the following items treated in the store ledger. The first one is material loss, which we have already looked at also a few minutes ago, and the second one is surplus materials. If you come across any surplus material, you are going to consider it as a new receipt. And we have returns of materials. It can be from the suppliers. At the same time, it can be from the business unit also. So depending upon that, you just try to study that also. It may be clearly given in the textbooks which you must be having. So you just go through and see. And if you have any doubts or if you have any clarifications to be made, you can always inquire and you can ask me also. And finally, we have is transfer of materials. Usually transfer of materials, we consider it as inter-transfer, and inter-transfer is not recorded or that do not find place in the store ledger. So these are the follow-up activities for you. I have just explained, and you just go through, do some research. Okay, you can search online also and try to make it more clearer. And further, if you come across any doubts, you can always contact me, or you can ask to your subject teachers. With this, we come to the end of this lesson, and see you in the next lesson. Thank you. Welcome to Bhutan e-learning program, and this is accountancy lesson